The Federal Reserve slashed interest rates again today for the second time since September, which could help lower credit card bills and potentially impact mortgage payments. But questions are now about Trump's economic plan and what that could mean for the economy. ABC's Lionel Moyes explains.
A big announcement from the Federal Reserve today following its two-day meeting, slashing interest rates another quarter of a percentage point.
We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained.
This comes after the Fed cut its benchmark interest rate in September by a half a percentage point, dialing back years of trying to cool inflation and give relief to Americans.
Bringing interest rates down to 4.5% to 4.75%, and that could help drive some borrowing costs lower, particularly in areas like credit cards.
Experts say it could take months before you notice the impact. Stocks soared Wednesday following Trump's election night win. The Dow rose 3.6%, the best day of trading since 2022. The S&P 500 increased 2.5%, the Nasdaq 3%.
A lot of investors are betting that Trump's policies will bring tax cuts, less regulation, and economic expansion. So that means companies like banks and big tech, they rallied big yesterday.
But some economists have questioned whether Trump's proposals of increased tariffs, a tax on products made in other countries, paid by American companies or consumers, could raise consumer prices.
I think the bigger question is going to be, what does the Fed signal about rates going forward, especially since Trump has said he wants to institute these tariffs, and we know that if they are in place, if they're high and in place long enough and they are retaliatory, they could fan inflation once again.
Inflation has cooled since its peak of around 9% in 2022. Right now, it's hovering near the target rate of 2%. The Fed says it bases its decisions on the economy, not politics. Lionel Moyes, ABC News, New York.